Hello everybody, good day. I'm Hutan and today I want to talk about another important coordination between two important indicators that we can use it for our trades, and it's really simple and really powerful. Let's check it together on chart and talk more about this issue. So we are here on BTC USDT 4-hour time frame. Now let's talk about the coordination that I was talking about. The first indicator that we need to add to the chart is MACD, moving average convergence divergence, with default numbers that we have it here. So we need to change the style to this. We don't need histogram and MACD should be in histogram. So it's okay. Another indicator that we need to add is moving average. But what moving average? The moving average should be, let's change the style first. For input, we should have 60 and source is to close okay, but not simple moving average. We need exponential moving average. So clearly you can see whenever price is above the moving average, MACD is above level 0. It's a really clear coordination between MACD in default numbers, I mean 12, 26, 9, and moving average exponential with 60 numbers. 60 period, and we can use it for entering the position. For example, let's see it here. We are above the level 0. This is the level, and here, as you can see, we are above moving average with the period that I was talking about. Moving average with 60 period. So another one. We are here down, and MACD is under the level 0. And here, with this little move, we are above the moving average, and as you can see, MACD is above level 0 too. So let's make it straight. So we can use it. How? Whenever this isn't happening, we can use it for having our entry to open our position. It's that simple. We can backtest this and let me know if it works or not in comments. I'm telling you, it's really work and you can use it. What do I mean about that? Well, here is an example. As you can see, the price is touching the moving average and it's going above it. Is it clear that price is going above? Can you see? Price crossed the moving average, but the MACD is under the level 0. It's under this level. This level is important. So we can enter the position here to sell. After analyzing the trend and having your strategy for entering the position, this will help really to filter your entries, and you can have more clear entry for your position by using these indicators, this strategy that I'm talking about. And of course, you can use this strategy alone for entering the position. And if you use it in multi-time frames, it will be more useful, like any other strategy. That we should use them in fractals, because market is moving in fractals. So this was one example, and you can enter the sell position here with this stop loss and this tip 1 to 1.5. It's enough. And of course, you can use liquidity, order blocks, FVG, I don't know any other else, but you can add this to them too, because any strategy that you are using, for example, you're seeing 1 point in price, that for a strategy is telling you that you can open sell position here, so you should open your position over there. But if you know where to look, because so many times market is showing us something that it won't happen, because if we are not professional, we will very easy be fooled to open a position. That's why so many professional traders tells us to open your position where anybody put their stop loss, and so many big traders tells us that market is moving from one stop loss to another stop loss, not from one liquidity to another liquidity, because the stop losses area is the liquidity area too. So let's see another example. Here, as you can see, market is above the moving average, MACD is above it. Market is down, is crossing the moving average, MACD is down the level 0. It's on it, it's on it. But in this 2 point, this one and this one, price crossed the moving average, but the MACD didn't cross the level 0. That's where you can open a position for going up, and so many other details and reasons for take this move, and where to put your stop loss and where to put your TP and so on. Let's see the examples. Here the price is under the moving average, but the MACD is under moving average too. But in this point, as you can see, price crossed the moving average here, but the MACD didn't cross the level 0. So we can open the position exactly here. We can open a position for going down. But why to this point? It's another issue. Here, yes, we are in imbalance. We're touching order block and so many other things. As I've said before, we can use all of them together. If your eyes be weaponized and you know where to look, and how to react to the point that you are seeing, you're gonna have a very big confidence to your trade and yourself for opening trades, and that's the time you know you're going to be a trader. Not be a trader, of course, but you are in the way. So here we are under the moving average, MACD is under it too. Here we are above, MACD is above. Here we are above, MACD is above. We are here down, we are here down. Here, before that, in this point. It's a really good example. Let's see it. So, as you can see, here we are above, okay? We are above. Here we are crossing. But in price we are not. So it's a sign that we can go up to where? To this point. Because between these three candles, 1, 2, 3, we have imbalance and we have order block. And imbalances and order blocks should be touched. Market moves up, fills this imbalance, and then comes down to where? To this imbalance between these three candles. 1, 2, 3. We have imbalance here. Market comes down, touch this order block, fill this imbalance, then goes up to this point. We have liquidity here. This is where so many people put their stop losses. Then we will come down again, and again we have imbalance between these three candles, 1, 2, 3, and it filled and the order block touched, and we can go down. And after the order block is touching here, you can see here price cross the moving average, but the MACD is under the level 0. So it's another reason that we can open our sell position here and moving with price to the targets. So here is another example about how to use indicators combined, and I'm telling you in the way to combine all these indicators together, and after doing the backtest by one look at the chart, you can see all the indicators together and all the FVGs, all the imbalances, and all you need to do your trades. But its need is to have more than 1000 hours backtest. And please do the backtest, be safe. Ask me any question in comments if you want. We will talk about all the details more than this together. This is just the beginnings. Thank you.